Nvidia posts blockbuster numbers, but the market reaction is far more restrained. So what's really driving the hesitation? Is it geopolitics, valuation, or something deeper in the AI story? I'm Johanna Bota, and here to break it all down is Alex Ridgers, VP Global Head of Retail Dealing Desk at StoneX. Hello, Alex.
Hi, Johanna.
So let's start with the much-awaited Nvidia earnings report. What were some of the headlines?
Well, I think the quick summary on the numbers before we get through to the juicy bits is that Nvidia's up, but not by as much as expected from the results. We saw revenue growth of 73% in Q4, which is pretty phenomenal. And I think the predictions for Q1, again, were pretty amazing. I mean, I think we're looking at $78 billion of revenue, profit revenue. And I mean, that's now equating to a PE ratio of 25, which is very healthy for a tech stock. So what I think is holding it back, or holding the stock price back, is there are fears about China and where the growth is going to come from there. So the US government has allowed sort of a small sample of Nvidia's hottest chips to go to China to be exported, but there's very tight controls. And at the same time, there are these controls also. China have to approve whether they actually allow the tech in. So I think it almost that when you get as big as Nvidia, you now become a political animal. You're not just any ordinary company anymore. Right,
lots of moving parts.
Yes.
What was your personal read on the release?
Well, when I look at it, I think it's particularly interesting what the chairman, Jensen Huang, is saying. So he is really pushing and talking about, and for me, this is a real positive, not just for Nvidia, but for economies as a whole, that software demand is growing. People, every day are worried about AI. What's it going to bring? Is it going to destroy jobs? Is it going to ruin companies? And he's saying more people are still buying computers. Demand for computers is growing. Demand for software is growing. So what that means is people are using AI to get more out of the software, more out of their computers. It's not destroying it. If it was destroying jobs, there'd be less people buying these. There'd be less people using AI. So actually, AI is not replacing, it's enabling people to do things better.
So what does this suggest for market direction then?
We've seen a lot of commentary over the past week or so, and actually it frustrates me because I think people are getting the wrong end of the stick, where we're talking about seeing headlines of AI jobs fears, as in AI is going to come in and replace all jobs, all companies are going to crash because of it. But I almost see a different angle from that. I see it as a positive. AI is any company that needs to hire less or no longer needs as many employees. What that means is they're becoming more efficient, more profitable. Processes are becoming better. So that should be boosting growth, if you see what I mean, not harming.
So what are markets fearing then?
Well, I think there are 2 points. In my last point, I was mainly talking about internally with the benefits of creating internal efficiency. So I think the one thing markets are fearing is externally, i.e. AI exists, it replaces whole industries, it replaces companies that are no longer needed. And Jensen Huang has been very sort of keen to point out that AI is not replacing companies, it's enabling them to work better. So I think that's a real drive from him at the moment. And then I think the other fear is we're beginning to see AI being talked about as sort of the great, sort of revolutionary changes. I think we're talking about canals to trains to fiber broadband to cloud computing. And what we've seen in all of these, and even in the advent of the internet, that not all companies that are there at the start actually end up being the sort of pervasive powers at the end of it.
Yeah,
so
absolutely.
From one perspective, I think almost this is sort of the takeaway as I see it. AI is great for other companies at the moment. The markets are fearing that too much money is being invested into AI, and there are going to be a lot of losers and a lot of fallout from that. So I think the idea at the moment is invest in companies that are going to benefit from AI.
Right.
Don't necessarily invest in AI itself.
I like that take. You mentioned earlier that Nvidia is becoming more of a government issue for the US and China.
Yes.
So do you see any broader knock-on effects for economies or even central banks?
I suppose this is sort of putting a positive slant on it. And again, and I sort of genuinely believe this. I think we have to, AI is not going away. It's here to stay. Take the UK. Productivity has been pretty horrendous ever since COVID. So what that means for companies is growth has had to come alongside hiring more people. So what that means is hiring more people creates a tight jobs market, which pushes up wages, which pushes up inflation,
Yeah.
which again is in the situation we've been in for the last couple of years of high interest rates. So what AI has the potential to do can be extremely beneficial, is to say, well, look, productivity can come from gains from your current employees. It's not necessarily about firing employees, or it's not going to replace the idea that there's going to be growth without wage inflation.
Yeah.
Because individuals are getting better. We don't need to hire more people. So what that hopefully does is it creates an environment where we have growth and we also have low inflation, which means that interest rates can drop. And then, and I think the sort of the old-fashioned fear, and I know I normally dress like a 1980s banker, but I'm quite sort of forward-looking on this thing.
I don't want to say anything.
Is that, I think the old view is, well, jobs go. There are X many companies, that's it. No more companies are going to be created. But when we actually step back, if companies become more efficient, if the facilities or some sort of the foundations of the economy are better to succeed, more companies will pick up, more companies will be created, more industries will be created. It might be a boom for the hospitality sector.
Well, I was going to say, so do you see a return to the hospitality
sector?
Well,
I think so. Again, that idea that jobs and money are being created without the need for other people, and we're creating a really good environment for growth. So therefore, more companies are going to be created. So in a way, if there is any fears about job cuts, and it's I think the famous saying is, it's only a recession if you lose your job. That's very harsh, but it's that typical thing. Short term, there may be job cuts, but actually, with this AI wave, there is going to be a boom of new industries that are going to be created by it.
Alex, thank you so much for all that valuable insight, and thank you for watching. For more financial content, don't forget to like and subscribe to our channel.